The vast majority of Tesla's stock valuation is based on the auto business. There is clearly also some amount of the stock price that is being attributed to other businesses like energy and the potential for autonomy and robotaxi. But for the most part, almost every institutional investor has not yet started to even consider valuing Tesla's bot opportunity. So today we're going to review some analytical tools and tables to start the conversation and get the analysts to pay attention. Yes, Tesla bot is here, it's real, and it should already be part of the sum of the parts valuation for Tesla's stock price estimates. Let's see if you agree. We've got Larry Goldberg here with us, and he's done a deep dive on this, and he's going to show you some tables and his logic of why analysts should now start looking at the bot and start adding it. Thank you, Larry.
Thanks, Herbert. Great to be here.
So let's start the conversation first with how the institutional investors see these opportunities. Many of them will say that I need to see that a business is real. I want to see them selling the product, having the revenue before I'm going to add it to my financial models, before I'm going to then add it to the stock estimates. So here's one example of an institutional investor, Gary Black. He sent this out on X and he says this, I can see the promise of the Tesla bot, but still want to view it as an upside option rather than bake it into my valuation until we, one, see how it adds value, and two, understand the unit economics. So then he says, okay, look, I'll give you an example. I can do what you do. I'm going to go ahead and start making up numbers. For example, if the bot can replace workers making $15 an hour, 16 hours a day, 350 days per year, its usefulness can be valued at $84,000 per year. If the bot is priced at $50,000 and costs $20,000 to make, Tesla can make $200,000 per year. That's $6 billion per year in incremental gross margin, maybe $4 billion in incremental profit. That would add another $120 billion in Tesla's valuation of 30 times PE. But I'm just making up numbers, so it can't be added to my valuation yet. This guy says, surely old me, madman, wouldn't ascribe some material value to it, given the huge progress we've all witnessed in the first year. Don't be one of those short-sighted fund managers, Gary. And he replies, those numbers I showed were all made up. That type of analysis doesn't fly in the real world. What's your thoughts, Larry?
Well, Gary's right. In not quite, grammatically correct to say in the real world. What he should be saying there is in the analysts and institutional investors world. If he looks from the viewpoint of that world, then it's fairly prosaic for him to say, we can't value it because we don't know what the cost is, we don't know what the selling price is going to be, we don't know what the market TAM is, and we don't know, who the competitors are. So there's just insufficient information to make a decent quantification of revenue and profit and therefore value. And you only have to look at energy to understand that for years, the institutional investor was not prepared to value energy. I had a whole exchange with Damodaran, the professor of valuation, over energy profits, because in his valuation, he regarded them as being surplus to the valuation because there was no way to really value them properly, and he didn't see that it was a very large market. I tried to show that there was a gigantic market, that the profits, that the margins were very significant, and that there was a very significant margin. And it was more than a year and a half after I wrote that people started valuing it in a sum of the parts valuation, or even started doing a sum of the parts valuation when they saw actual revenue and actual gross margin. So you can understand the institutional analyst, because the institutional analyst has this responsibility to the investor public and to the regulators to be awfully careful and to have real good facts behind their numbers. We can take a different perspective. We, the retail investor, can take a very different perspective. And we who work with the retail investor, not to advise them, but to help them think about the company in different ways, we can take a venture capitalist view of the company, because for us, it is like a VC investment. And that's, that's the unique differential between the retail investor looking at Tesla and valuing it. And I'm not saying that every investor who invests in Tesla is a venture investor, not at all. Most of them are investing through institutions based on institutional valuations. But we who've done extremely well, many of us have done extremely well out of Tesla, have taken a venture view of Tesla. And I've looked at the bot from that perspective, because I'm a venture investor. I invest in a lot of companies that, no institution would touch or try value. But venture capitalists have created tools that give us the means to do valuations that give us, profitability and good returns. So what I'm arguing is it's quite legitimate for us to develop those tools. And by the way, those tools are going to prove very useful to the institutional investors when they begin to develop the level of confidence in the numbers they're beginning to see. Does that make sense to you?
It makes a ton of sense to me. So I want to ask you a question on that first, but I'm very excited to show these tools you're talking about and the tables and the kind of just the way you think of things. I appreciate that you spent the time to work on it, and I think the audience will find it valuable. But so, institutional investors, they look at the quarter. I think, like so many of them, they will be very bullish on Tesla. And I get AI, I get bot, but then they don't add it in to the estimate because that may not happen in the next quarter, next year, and they don't want to be hit by saying, I think the stock price is this much, and then it only went up a certain amount. They're so careful. Now, however, my view as an investor is I want to get in before it shows up in the revenue, before it shows up, before everybody understands it's a business. The whole point of investing is to see things before ahead of time. And so this is where the disconnect is here's Gary saying, I need to see it first. Otherwise, I don't want to make up numbers. Well, the whole point is be ahead of the game. That's how I perceive things. Let's take a look.
You're not wrong. You're not wrong, but that's your perspective. Gary, he's got an audience where some people in that audience would take a great deal of umbrage if he made that guess and the guess turned out to be wrong. You're making the guess based upon, a certain judgment call, and you're prepared to back that judgment call with, your own money. Mm-hmm. It behooves us to tell, our audience, these are speculative investments. When you invest in a company that hasn't yet completed its development of the product and hasn't put that product yet onto the market, you're moving the investment thesis back to that speculative level. Now, all investments are speculative, of course, but you're moving it out of the realm where institutions normally get involved. And the public markets have been created in order to invest in companies where the level of risk for the individual investor has fallen to, a modicum, to a place where it can be measured by these conventional tools. The venture market is not for the retail investor, and it's not for the casual investor. The venture market is for the professional investor who develops these tools to measure these things and who can take that kind of risk with a proportion of their assets. So the first thing I would say is that it's fine for us to make these judgment calls and to show the reason we come up with these calls, but it's also at the same time important for us to explain to people, look, this is a risky business. We could be wrong. In fact, we probably are wrong. How wrong we are is the only question. And whether it's to the upside or the downside, but we're wrong. And it behooves us to explain to people the risk that we're talking about and what's involved. I am very hesitant about using these tools in the public simply because the public tend to, people naturally who with less experience will see numbers on a piece of paper and say, look at that number. That's great. I'm going to invest my money. we've got to be very cautious about that.
Appreciate that. I love it. We are wrong. That is true. And yeah, the goal is to be less wrong. Okay, let's show them your table. This is amazing. So you're looking at a variety of the bot manufacturers and vendors and competitors out there, and you want to say, why do you think that Tesla's bot is already at the point that you could possibly start quantifying it in this Tesla stock estimate in the future? So you've got this table here. Tell us what this is about.
As a venture investor, investing in a lot of areas that I may not have perfect knowledge, what I try and do is gather as much knowledge as I can from experts. And what I love about your channel and other channels on YouTube is that you do bring experts to the table. I listen to them. I also go, to this incredible tool, the internet, and look for information that I can find. And what I do is start pinning against the wall the pluses and minuses of each company and where they are in the game. I try and judge the company. I try and judge the funding. I try and judge the skills of that company in that particular area. I try and judge. And what I'm doing is, obviously you should be able to see, is that I'm working my way across the top, the top header. I look at the engineering skills, the AI skills, because this is all about AI, the AI training resources that company has, the skill in terms of putting together electronic components and building logic components that will actually be able to manage the amount of compute power that each of these devices are going to need. The chip development, are they going to have to buy their chips in the market? Are they going to be able to develop, custom chips? The prototype, where they are in the cycle of development. Are they a prototype? Are they in production? And what are their production facilities and production skills? All of these things are important. Now, there may be some more important vectors that I haven't thought about, and I'm going to be adding them over time. And there may be some vectors I want to take off. And then what I've done is try to find as much information as I can. And, I stopped at the 10 or 9 that I've got here. Why? Because information right now is so spotty, and there are, that it's very difficult. And so I thought I would start with these. These are the ones that seem to be the most active, that's got the most publicity. And I've kind of judged them on a very, very granular, not a very, very granular basis. I've said, high, medium, and low. That's it for the moment. And let's just put down the amount of information we have. So, for example, in funding, Tesla's got, almost unlimited capital in relation to building Optimus and in relation to these other guys. Boston Dynamics, they're part of Hyundai. They've had an enormous amount, $3 billion of investment so far, but Hyundai have got a bottomless, got very, very deep pockets, if not bottomless. Agility, we know that they've raised 170 million. Figure, we know they've raised 70 million. And then we start getting into, 1X. We don't know how much they raised. They talk a good game, but we don't know. We know that Sanctuary's raised 19. We know that Apptronik has raised 14.6. I kind of cut off at the 20 million mark. I said, if you don't have 20 million, you may not be in the game yet. It doesn't mean you're not in the game, but it certainly means that you're not in the game yet. I might as well have cut off at 100 million, but, that seemed to be too rigorous at this point. It's so early. And then I try to, and so we go. And so we get these, red, pink, green, light green, we get these kind of judgment calls at the various levels. And there may be some other, headers we need. And, this is something I haven't yet exposed to, experts like Scott, Dr. Nodal, James Dharma. I'd love to get their inputs as to what the most important vectors are, and then try and get some scores out of them. And the way I've scored this is I've looked at, for each of these companies, I've looked at their website, I've looked at all the videos they put out, and I've made some judgment calls, and I've got some other matrices based upon each video, other matrices based upon each website, and so on. This is really how a venture capitalist would start. If one of these companies came to me for money, this is where I'd begin. Where are we in the journey? What's the size of the market? And I'll get onto that in a moment. And how do we rate? What are the risks and what are the threats to what we want to do? So this is just part of that whole SWOT analysis, and it takes a little bit of time. And as you'll see, there are a huge number of question marks. And there's some areas where my judgment is probably not accurate either. So, but I'm very confident of the scores that I've given to Tesla, very confident. And in fact, they're kind of my benchmark because I know so much about the company's finances and I know so much about the engineering skills. I know so much about, all these other vectors. So this is not I'm not showing the slide to say this is the current state. I'm showing the slide to say this is the matrix I'd like to use, or at least the beginning of the matrix I'd like to use, and I'd like to evolve it to where it's more accurate, dramatically more accurate than it is at the moment, and maybe more granular.
Okay, let me put this in context from the way I see things. So first of all, this is not about who is TeslaBot competing with. Every single one of these guys here will succeed. If they can make bots, they will sell bots. There will not be any rubbing, competing with each other for 10 plus years once we get to hundreds of millions of bots out there.
May I just raise one question about that? Mm-hmm. That is, I don't think everyone will succeed. I think everyone has the opportunity to succeed.
Yes, that's what I'm saying. If you, there are many of these will die. They will not make it past, the stage because you do need a lot of money. You do need all of these sections here. I'm not saying that. I'm just saying that we're not here to say that, oh my God, we have to be careful because this company is going to beat Tesla and therefore I'm not going to invest in Tesla. That's my point. And your point about investing in Tesla and why you think bot could already be added to its stock valuations because it has all of this at the highest level, and we've seen the prototype, and it's almost ready for scale. We've seen the AI skills, and it's really the largest supercomputer in the world. All that stuff. So, they're ready, and that they have the manufacturing capability. So all of this is in place for it to be a real business and to become a real business soon, which you'll show us. So that's step one.
And I would also add one other thing, that we all understand well in advance of everything else we're going to see is that AI training and skills are the key to the success of the humanoid robot.
Yep.
What we don't know is where the skills and the capability for these other companies are coming from, because none of them have got the background or the skills for it.
I will share with you some more information. I just did a video with Scott Walter, and we're going to drop that on Saturday. I don't know when we're going to drop this video, but NVIDIA, powerhouse NVIDIA, just made a big announcement at the CES conference this week. And they showed that they actually partnered with Boston Dynamics. They partnered with Figure. We believe that they partnered with Digit Agility as well, but they didn't name them. But you can see in their videos, they show them. They partner with Sanctuary and Unitree and many other bots. And what they're providing them is the AI skills, the AI training, the ChatGPT ability to communicate to those bots and to be able to tell it and to the bot to understand. So that is very interesting that NVIDIA, these guys already partner with many of them. The other thing, as we know, as you said here, that agility is Digit, and they don't have a brain, they don't have any hands, but they partner with Amazon. And so you've got, they've got this, and then you have Mid, because they've already announced that they have a facility that they're building, 10,000 bots in Salem, Oregon. And so they have a partner, so they have enough money to raise, and they've got a business model, and they're going to very likely succeed. So that's why you got them up here. shockingly, you got Boston Dynamics here in a second high because of this stuff. But you know that the CEO and the company just announced, or they were just did a video, they're not selling the humanoid bot. They're selling the dog spot, and they're
Yeah.
selling this stretch, which is this basically a standard fixed thing in a warehouse.
But I do
And
raise the point.
yeah,
I just on that point, I do raise the point in my thesis that Boston Dynamics may well be running in stealth mode for the humanoid robot that it wants to sell. So we should not count them out because they have a lot of skill sets that others don't have. But I'll make one point about NVIDIA. NVIDIA also created a chip and a kit for self-driving cars, and that has gone nowhere because the problem with NVIDIA supplying all of that, those electronics, the AI skills and the AI training, is that it comes at a very high price. And that's been the problem with, full self-driving for a lot of these companies. So much more successful has been, Tesla in terms of doing it in-house. And so that's why the partnership thing is an open question, because the key skill, the key capability of your product is controlled by a third party who's supplying the same controls and the same capabilities to the other manufacturer. So it's as much a minus as it is a plus.
I totally agree with you. I was just pointing this out. My conversation with Scott was that these companies that you just mentioned, that's not Tesla, they have created a prototype humanoid bot, which is looking very, very impressive. But they need to partner with another company to do the AI. In this case, let's say NVIDIA or Google DeepMind or some other company to do the brains. And then they have to partner with somebody else to do the manufacturing. Maybe they'll have to hire a Chinese manufacturer. They need to build these factories. They don't have the manufacturing capabilities. So it's like now you got 3 parties, 4 or 5 parties to build one thing. Anyways, like we said, it's just another negative.
Yeah, and that's why they're not a deep green. But it's just one factor to weigh up. Yep.
Yeah. So I love what you did here. I think that it's pretty accurate. All the research I've been doing, all the shows I've been doing, this actually is a nice list. The only thing is I disagree that Boston Dynamics Atlas may be in stealth mode. They just literally just this week came out with a video and they said they're not going to do that. But yeah, I mean, maybe. Okay, so let's move on. Tell me what this slide is, the opportunity.
Yeah, so this is an interesting slide. It's based upon a whole mess of Excel spreadsheets. Every time, you look at a venture, you have to weigh up its potential profitability. And so there are a whole lot of vectors that go into this. The one is what the bot is going to save the user of the bot, and then how much it's going to cost to run, what the profit is. That will discount back to a purchase price, a reasonable purchase price, and that purchase price will then be looked against, your cost of building the bot, and that'll give you your profitability. So what I've done is I've started with what are the savings, and I've done that by looking at the classifications of labor. I've looked at the lowest cost of labor, that is to say that, the lowest wage rate in the United States. Sandy Munro tells us that the bots are going to be used first for the 3 Ds, the jobs that are dirty, drudgery, and dangerous. And that falls often to the lowest paid members of the labor force. And so what I have to do is look at what the firm that is employing the bot to do that work, what they're going to save, and that's this orange line or red line, whatever the color is. No, sorry. What is the replaced value? Is this light blue line? This is the annual value of the replaced labor. The blue line is the value of the savings discounted over 5 years. Value of the savings over 5 years discounted back at 40% per annum. Because one of the skeptics I heard on YouTube said that industrial robots have to make their case at a discount rate of 40%. Seemed very high to me, but he was absolutely adamant, and he was supposed to be an expert. So I said, look, how bad can it?
Okay.
It can't be any worse than 40% discount, right? So the value of savings for the replaced labor is $83,000. So if I buy a bot to do that lowest tier of work, and I will tell you, I've built in some very, very, very high cost of operation.
Mm-hmm.
And in fact, so high that people I've shown this to say, oh, it can't be that expensive. Yeah. I think it is in the first case going to be that expensive, actually. And so I've learned, as a venture capitalist, I've learned that you can never put your expenses in your spreadsheets high enough to actually equal reality. So
it's always higher.
It's always higher. I mean, and when people show me their spreadsheets, I always say to them, higher. Anyway. So at $84,000, the question is, can you make a profit? And what are your costs going to be, and what would you sell it to that guy for if he can only make $84,000 profit out of this over the 4-year period? Mm-hmm. And then, or discounted $83,000. And then I looked at the mean salaries. And by the way, these salaries are very accurate. They're taken from Fred. They're taken from the United States the Labor Department. So I feel I'm very accurate. And this 206,000 is the total savings over the period, and this is the discount back to. And then at the mean level, we're looking at $600,000, and there you've got your annual net savings are closer to what's this 100 and some thousand, 110,000. 200,000 is what the labor that you're replacing would have cost, and 249,000 is the value of your savings over a 5-year period. And I use that really to set what is a lease rate, what is the subscription rate for the bot. And by the way, the subscription rate doesn't just mean the bot; it means the bot, its operation, its software, and and you can even build in the way I don't want to go into the detail of it, but you can build in a subscription for the whole management of the bot labor force as well. And that's a whole nother business. That's a whole nother part of a potential business model. And then at 75%, which is the top 25% of the labor force, at the 75% salary level, your discounted savings are $300,000 because you're saving $783,000 over those 5 years. And if you actually can supervise the bots with a bot supervisor, in other words, if you go to the very top of the tree, then you're saving, 1.19 million, which discounts back to 484,000. And that's the highest potential. And so I'm assuming, so in answer to Gary, is that we have a number, we have a very good number in terms of what the potential income from the bot is. A very good number. And by the way, we have a very good number for the cost of the bot. Scott, he's an expert at this. He looked at the damn thing and can almost give us a bill of materials and a pricing. But I use the Elon Musk method. I look at the molecules involved and I think about what is the bare cost of the components, and then I think about the multiplier of taking the bare molecular cost and updating it for the level of skill that you need to manufacture it, and I come up with a cost. And that cost is so much less than the potential selling price. So even if you can sell that bot for $40,000, you're making almost double the margin that you're making on your cars right now. You know? So, I mean, this spreadsheet shows that here are some real numbers that Gary could plug in terms of income.
Yeah. So you took that graph, and this is the spreadsheet that basically just supports that graph. And I think the point you're making, which makes sense, that in this case, because the bot opportunity is so amazingly big, and even if you're off, like, yes, you're guessing, just like anytime you're doing a business model.
No, but these numbers are not guesses. Eh? These numbers are not guesses.
Yeah.
These numbers are absolutely spot on in terms of, United States Department of Labor, and these are facts. So everything in that other spreadsheet, in that table, was a matrix, was a guess. Everything in terms of the cost of the bot is a relative guess. But these numbers are no guesses at all. The only guess about these numbers is what level of skill set will the bot be able to develop, and will it be able to develop it? And that's the area, that's the one huge unknown in this thing. But if you go back to this table, I want to show you one or two things about this table that are quite important. And that is this. My estimates include expenses for which, and I've shown this to one or two other people, and they've all said my expenses are too high by a factor of 3 or 4. Why? Mm-hmm. Because I put in maintenance cost of each bot at about $6,000, and I put in the annual training of cost and supervision at $67,000.
Whoa. That's a lot.
And the reason I've done that is I have a whole nother spreadsheet that justifies this, because I don't think people realize the amount of support, maintenance, training, supervision that is required, and the level of skill sets that come with it. And I suspect that this is a major business opportunity in and of itself, because I suspect that the average business won't want to make that investment in this kind of technology or technological skill. And they'll have Tesla come in and manage their bot force and train their bot force and supervise their bot force. And I think this is a reasonable number.
It's high. It's high. So I guess that's what my point was. Much of this was not guesses, but some of it is. But even if your guesses are off by significant magnitude, the profit and the revenue and the thing is still so high that how could you ignore this? It's not that, his argument was, well, I don't want to be guessing. I want to see real numbers. The question you have to ask yourself is a bot going to actually replace human workers in some cases? And how many of those workers, and I like the way you broke it down to, just the simple kind all the way to supervisory. Yeah. So, the simple general expert supervisor, there's some simple jobs. And even at the simplest job, less than the wage of a, can it replace somebody? And I think the answer is yes, because we're already seeing many bots replacing humans today.
I'm going to challenge your thesis. I'm going to challenge your thesis. And I'm going to challenge, for that matter, Gary's thesis. Bots already replace humans, period.
That's what I just said. That's what I just said.
No. Bots replace humans. There's no question about it. It is not, can they? The question is, can Tesla's humanoid bot replace workers on the level of, economic value that I've got there, or something similar? And if they can, will they be competitive with other bots that may be able to do the same thing? That's the underlying question. We already know bots do very well,
Exactly.
Scott Walter builds them. Other people build them. KUKA have made a business out of it. Not very big business, by the way. These are very small businesses. I've looked at the top 10 bot makers, and, some of them are parts of very large companies and others are standalone. But, they're tens of billions. They're definitely not in the top 50 companies in the world. So top 50s do make them, but it's a very small, it's a division with them. So the thesis that the bot will replace humans on a large scale is driven by the incredible value opportunity that spreadsheet shows, and that so many other other people's calculus has shown. And we definitely know that the technology is reaching a point where this is where we feel confident it'll work, and that's the area.
Sure. Yeah.
That's the only area of disagreement, and that's the only area that Gary can realistically fall back on. All the other numbers are calculable, and in that regard, he could take those numbers. The issue is, what level is the bot able to enter the workforce today, and how profitable it will be? And I think the answer is pretty clear.
Okay, so Larry, you've made a very good argument right now to say that yes, the bot should be part of your estimate for Tesla stock. How much? How much would you say?
I would be a little bit more cautious than most of the numbers I've seen thrown around. So I would say that firstly, it's going to be a very competitive market. Secondly, it's going to start slow because the level of adoption is going to be relatively slow. People are not thinkers like you and me. People who own businesses with large numbers of workforce have to, by definition, be very cautious and conservative. And they have to consider their labor force from the perspective of, the labor force's own, self-worth and their concerns. So there's going to be a limited level of adoption until breakthroughs occur where adopting companies start really delivering to the market products at low cost and start making big money. Look, the United States is the second largest manufacturer in the world. Believe it or not, second only to China. Even today, where we've, offshored so much, we're still the second largest manufacturer in the world. This opportunity puts us in a position to find ourselves at parity with the Chinese, who are going to have to adopt robots on a massive scale to replace their, diminishing working force. So there's there is an absolute imperative for us to get into this business. Absolute imperative. There's no question about it. But I think it's going to be slower than people imagine. It's not going to be a wildfire thing. It's going to be step by step, because so much of the manufacturing that we have in this country is at very high levels of skill and very demanding and already fairly automated, if not very automated. So I haven't got to the point where I've looked at the size of the market or sized the total dollars, but I think that the numbers I've seen running around are unrealistic in terms of the speed of adoption. They're not unrealistic, I think, in the ultimates, but in the speed of adoption. And so I haven't done those numbers yet. This is all gut feel from looking at other people's numbers. So I think that we will see dollars flow in the 2026 period. I think we'll see dollars flow. I think they'll be reasonable. I don't think they'll be great. I think the real uptake will be in the 30 period. That's what I'm thinking.
Okay. Yeah, that's fair. I have a different opinion than you, of course. I think that it's going to be it's going to be faster than you realize. And the reason is because labor cost is the number one highest cost that companies have. And there are many jobs that are low skilled that can be replaced today. And there's many jobs that are not automated, like the retail, the restaurant, many factories, even Tesla's factories. Tom Zhu said that gig in Mexico, he goes, what happens when we have 5,000 bots? So even in factories that are fully automated, there are workers that can be replaced. Now, the reason I think that it can be faster than we realize, or put it this way, every bot that Tesla sells will be sold, but they're not going to sell it. They're going to use it themselves for several
That's
years.
true.
So I totally agree with that. And then they will sell it to their supply chain partners, secondly, because it's a double, triple whammy there for their benefit. Now, my point is this, that once companies get whiff that this thing's working, there's going to be a rush of companies coming, demanding, and putting in orders now. Because if I think Søren Basher did this fantastic analysis, or his thought experiment, right? If you are a company that are first mover and you booked the first bots, you can wipe out or significantly damage your competitors because you have much lower costs because you had put in the order for 1,000 robots for certain something you're building. So it could be the opposite of what you're saying. So we'll see.
I prefer to look at my perspective, and I'll tell you why. You may be right. You may be 65% right. You may be 75% right.
Mm-hmm.
I may be 25% right, or I may be completely wrong. There's a chance I'm 100% right. When I invest, I prefer to look at the most likely negative outcome.
Gotcha. Okay. Fair.
And if
for investments,
if that reaches, if that gives me a margin, a realistic a valuable margin, a margin that's
the baseline. Yeah. The worst case scenario. This is it.
Yeah, then I'm prepared to look at it.
Gotcha. That's fair.
And we're doing this from the perspective of a venture investor. Now, think about Gary's position. He's an institution, and he's doing analysis for institutions. So he has to take an even more conservative posture than I have.
Yeah, exactly. That's what we're seeing. So this is a big debate that the Tesla investors are having. Should the bots already be part of the Tesla valuation? I say it is, because obviously, Tesla's in 5 businesses, one of which is the mature auto business. You've got to consider the fact that there are 4 other startups within Tesla. If this was a separated company by itself, based on your table that you showed, would people have a valuation for that company, or would they be zero? They wouldn't be zero.
It wouldn't be zero. It would be a very interesting number, and it's a number that I believe my tools could help us reach.
Exactly.
So that's the reason for the tools.
That's my point. So I agree with you there. Thank you for doing that. Follow Larry on X at Tesla Larry. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.